And this is especially true, like if you think of it as a journey, it's like, great, you rocked it fund one, great, you rocked it fund two. And now everyone thinks they're going to be like a $500 million solo GP.
We would love to grab a hot take from you.
Hot takes, wow. I don't know if I'm one for hot takes, but
Welcome back to VC Unfiltered. Super excited to have not a VC on the show, but someone that accelerates VC. So he does what Pegasus does, but for VCs. We've got Winter Mead coming onto the show today. He runs Coolwater Capital. They are the accelerator for emerging fund managers. And honestly, I couldn't be more excited to talk to someone about the ecosystem and about some of the challenges that emerging VC managers end up having. So Winter, welcome to the show.
thanks for having me.
You have a very interesting model, right? You're not taking money and putting it into startups necessarily. You're very much a kind of a power connector in between LPs and emerging funds. So I would love to find out more about Coolwater and kind of the work that you guys are doing.
Coolwater is a concept that was kind of born out of my time as an institutional limited partner, also called an LP, where those are the investors that are putting capital, allocating capital into venture funds, real estate funds, private equity funds, hedge funds, right? The money behind the money, so to speak. So when I was working as an LP, I was kind of noticing that a lot of the dollars, most of the dollars, the vast super majority of the dollars were going into larger funds, right? More established funds. So you start a fund, people call that like a fund one, right? Like it's your first time investing a pool of capital with a specific strategy. And then, you have fund two and fund three and fund four, and eventually like you're kind of grown up and it's rinse and repeat. There's repeatability. That's what a lot of limited partners are looking for, is that repeatability factor and that proven success in your strategy, your investment strategy. So I noticed like, okay, when these funds were growing up, fund one, fund two, fund three, there was a gap, right, of institutional support. There weren't institutional LPs. There weren't institutions or platforms supporting that part of the market. And that's different. Like if you think of the startup ecosystem, the startup ecosystem has accelerators. They have studios now. They have incubators, right? There's an ecosystem there supporting early stage startups, but there wasn't an ecosystem or even a platform, right? We pioneered the model. There wasn't even a platform supporting early stage funds, right? And so there were kind of these ad hoc examples over time within the private equity world, within the hedge fund world. There's a little bit in kind of the VC world, but it was usually driven by like one person who had been massively successful as a founder of their own firm. And then they weren't building like a new platform. They were really just like writing a check as a high net worth individual into these funds and then like kind of giving them a little bit of advice here and there. And so what Coolwater has done, right, and attempted to do kind of back then was build a platform, right? Build an accelerator for funds. Build kind of a systematic program to offer systematic support to these funds when they needed it the most, right? And similar to how, if you think about the venture capital world, you have these seed stage managers, like what are they doing? They're helping startups at their first round of capital, right? Like when you actually need it. And like when you're pre-IPO, you need help, but you need different help, right? Like you might hire a CFO or something, like an institutional CFO that has taken a company from private markets to public markets, right? Like you need a different type of help. So it's never like you never need any help along that journey, but in the beginning it's much harder, right? Because you have to like carve out your niche and you have to build your whole operations and you have to set up your whole financial, back office, and you have to, figure out what's the capital network, who's going to invest into me, like what's the narrative I'm telling, what's the current state of the fundraising market. There's all these things you're, pulling together. And so you're the CEO, you're the CIO, you're the COO, you're the CFO, you're the CMO, like you're everything in one as like you're launching the firm. And then there's like an OMG moment, right? And you're like, who do I go to help, right? Do I go to this person who's, massively wealthy and wrote me $1 million check and wants to talk to me once a year? Or do I try to find a platform where all they do is like support me day in and day out? And that's kind of what Coolwater is. It's the vision is to be the platform where any great investor anywhere in the world knows where to turn to. They turn to Coolwater.
You attribute it to similar to the kind of an accelerator model, right? Where you're actually coming through cohort style, most likely, and that you're taking them through a very structured program. So for an emerging manager, what does that program actually look like?
There's an application process. So in the early days, I was talking to one of the original LPs, investors into Y Combinator, and their feedback was, okay, what's your mechanism to kind of like talk to everyone in the market, right? Because again, from my perspective, there's certain tier one VC firms, and their job is to go out and like let's say there's 40 of the same type of company, right? I'd say consensus view is that there's only going to be one, maybe two or three of those companies that are going to like aggregate over time most of the value in that category, right? And so what are you trying to do as a VC? Like, your job as a VC is to go out and try to, meet with all 40 of those concepts, right, at any point in time, and to try to pick, bet on the horse that's going to win the race, right? But you kind of want to meet with all 40 first. And so the feedback originally was like, create an application process, create kind of a mechanism that allows you to meet with as many great investors, to start. And so we believe we've built, a lot of that, some of that. We see over 1,500 teams in the U.S. per year, right? I don't feel that's good enough for my standards, but it's a lot of managers, right? Like when I was working institutionally, like we would see less than 500. So it's, multiples of that. It's not an order of magnitude greater than that, but those are qualified teams. Those are good teams, kind of applying to, say like, hey, I'm going to start a fund this year in the U.S., right? So, and if you look at the data, there's only, probably last year, there's probably only like 500 or so firms that actually launched, maybe a few less. So we're seeing a lot of teams like at that kind of, I don't know, I'd say the top of funnel is bigger, but in that qualified set of people that have a chance to kind of launch a fund. And then there's even like the people who actually launch their fund, right? So that's the first piece is like, hey, come out of the woodwork, talk to Coolwater. We'd love to kind of like see your application. And then, there's a process to kind of like, work through, interview, references, like, we kind of explain kind of our philosophy and kind of what we're doing. And again, we're just looking to intersect, right, with best of the best. During that interview process, during the application process, we talk with literally hundreds of people of like the qualified, top of funnel, the qualified, and then the qualified to actually get an interview. So we're talking to hundreds of people, really trying to understand like what's going on in the market, right? Are there new themes emerging? Like what's the quality of this team? What's their background? If they're kind of a newer team, like what's the composition? What's our bet on like the fact that, again, like they're going to be successful, raise a fund, get into business and start deploying capital into startups. So that's a big part of the process, is like that application interview process. And again, we gather a lot of data, a lot of perspective, we build relationships with a lot of kind of newer managers, and it's a tough process because we're trying to make a bet on, at that point in time, 20 to 30 managers to come into this program. But that's a multi-month, interview process. Sometimes we talk to as many, like a single person, like I'll talk to as many as 40 people in a single day. So 15 to 30 minute calls back to back. Like it's insane kind of doing that. And if anyone's ever done like 15 straight hours of calls, like, right, like it's a little bit like taxing, but we don't want to lower the bar. Like we want to talk to everyone that we think has the potential to support founders. And that sounds a little out there, but like that's what we're trying to do, right? And until there's an AI that can do that better for us, like we have to put kind of, man and woman power against that. So that's the like application interview process. And then we have kind of the fortunate group that, we're excited to work with and they're excited to work with us. And then, you come through a multi-month training program. So we bring as many kind of qualified people, teachers that we believe can offer great perspective to emerging managers. So there's more investors than there are great teachers, in my point of view. And so what I'm looking to do is find some of the greatest teachers in the world that just haven't realized that they're the greatest teachers yet. And maybe they've invested in like 100 funds, and I'm talking to them and I'm like, wow, your perspective is incredible. Like I wish every emerging manager like had your perspective or knew your perspective. Please like come into Coolwater and like, help teach for us, right? Especially if it's like, strategic or helpful to the teacher. So we get, 40 to 80 people come in and actually like teach this, curriculum that we've built. And, you're getting different perspectives. Like if it's just me up there at the front of the room, teaching all, couple dozen modules, that's less interesting. And I actually don't think you're smarter than if you bring in like, 50 people to offer 50 different perspectives, right? You have like one perspective, which is my perspective, or, do you want 49 other perspectives and you get delivered the same content? So that's kind of how we've structured it. So it's this very intensive training program. And then, yeah, we've kind of built kind of the end cap, like, right, like everyone wants something to look forward to. Like if you're training on a, sports team and there's never any games, right? Kind of what's the point? So I guess the game for us is like the demo day or the summit. And so at the end of, every kind of training program, we kind of, have an end cap and cap it off with like a demo day summit, where we get, at this point in time, hundreds of people together, LPs, GPs, experts, anyone that wants to like, support emerging managers and kind of putting their money where their mouth is. Like those are the people we want at that event. And we've kind of scaled that up over the last 2 years. That started as a 15-person event, and we're doing one in New York next week that'll be over 400 people. So it's like it's scaled quite significantly in the last 2 years. And again, the idea there is organizing and consolidating an ecosystem that supports emerging managers.
No, that's super exciting. Honestly, it sounds almost exactly like an accelerator in general, kind of same methodology, but changing the focus. So it's super interesting. And I 100% feel your pain on having the 15 hours of back-to-back calls where we're going through diligence for the actual accelerator for the portcos. So yeah, 100% feel that.
The idea is not to feel any pain.
Yeah, God, even if every single call went perfectly, I mean, it's such a long day because keeping that focus for that long, because you have to be so dialed in when you're talking to these companies that if you're not, that you get a short time with them, and if you're not asking the right questions, then
it's yeah. Yeah, somehow we only have 24-hour days. It'd be nice if there are 40 hours. You get a few more breaks in between calls.
Oh, I'd kill for another 8 hours every single day. So I guess moving kind of through to that. So what are some of the mistakes that the emerging managers make either in the interview process or when they're actually going out to talk to some of the funds? Like what are I don't know, the top 3 to 5 I'd say that are out there?
The first on the interview process, it's tough. I think maybe the bigger picture question is like, what mistakes do emerging VCs or emerging GPs make when they're talking to LPs? Maybe it's similar. I'll try to answer both of those questions as the same question because I guess you could consider me an LP, right? An institutional LP. One of the biggest mistakes is just like not having crispness in the narrative. This one might be a little bit different because if you're talking to me, like I would say Coolwater is more forgiving than your typical institutional LP. So, right, like we're almost kind of like, again, like taking it from here, right? Great investor, great potential. And we're helping you get over here, which is like buttoned up narrative, the full package, right? Like ready to kind of like talk to institutional LPs and kind of raise your fund, right? It's like we're helping you build that fund product. We're helping you kind of dial in that narrative. We're even helping you kind of build from scratch your back office. And so it's a little bit different. Like what I'm looking for in the interview process is more potential and like an understanding like, okay, how do all the different pieces fit together? And right, it is that pattern recognition of, okay, I've seen this pattern before in the private equity world or the venture world or, some other asset class where, this type of strategy has worked and has led to, value creation. Right. And then you're kind of trying to understand, a layer deeper, which is like, okay, I've seen kind of that pattern. Like, is this the person to do it? Right. The jockey versus the horse. Like, great. I've seen the horse, right, kind of win before, but, is this the right jockey for that horse? And so you're kind of looking at both of those things. And then like the market maybe is the track and you're kind of saying like, okay, great. I've seen the jockey and the horse, but, are they climbing up? Like, is this a horse that has to do the same thing as a mountain goat? or is this like an actual racetrack, right? Where it's like, that is kind of like a big market opportunity where they're gonna like shine and thrive. And so like you're kind of looking for pieces to kind of add up together. Okay, the thesis makes sense, right? The strategy feels like the right team that's going to execute on that strategy, and it feels executable, right? The track record, right? It's been like, I can't like, like when I'm having that conversation, like people are coming in with sometimes like 20 years of experience and track record. So like they're coming in with just a ton of insight and a ton of acumen, right? I just got off a call with, a GP at a corporate. They're talking about spinning out in a few years, and they already have kind of 10 to 15 years of experience, like working in financial markets, working in capital markets, helping sell businesses, helping build businesses, now working for a corporate, right? I couldn't invent that for that person. They're coming in with a great story, great experience. Yes, I'm helping them shape kind of the thesis and the strategy and how to put the pieces together, and what should organizational development look like, and what should, again, like your back office look like. How should you build kind of the cadence of meetings, and like what is that, everything that goes into building kind of an institutional firm and institutional strategy. Again, we help you kind of with the potential over here, but like you're responsible for the potential coming in. Like I can't make you the person you are when you come in, but we can like help you build your firm and kind of dial in that narrative and help you get over here to like institutional, like, positioning for fundraising. And so, I think a lot of people make that mistake. I don't think they practice enough. Like, I don't think they're, if I'm simplifying it, sometimes I don't think they're thoughtful enough on developing the thesis, right? Like an easy question to ask is like, what actually makes money? Like, why are investors giving you money, right? They're giving you money so you make multiples of their money. So like, what are you trying to, like, you're trying to create something that's repeatable, right? A thesis that's insightful, a strategy that's repeatable. You're trying to create something that's repeatable that will make multiples of money, right? So the thoughtfulness that goes into that, I think sometimes is, wanting. Like you leave LPs like wanting for more. I think you go in, I think a lot of GPs go into the meeting, and, I've run into the same issue myself, but like talking too much versus like asking questions, right? 2 ears, 1 mouth for a reason type of approach. So, I mean, that's again, boil everything down to simplicity, like 2 ears, 1 mouth. Like go into the meeting, you're listening, you're asking questions, you're genuinely curious about like, okay, where do I fit as a product, right? You're like, hey, like I replace roofs, right? I'm going to replace your roof. Like I sell the best shingles. I'm going to replace, like, it's going to be the greatest like roof replacement ever. And like the other person sitting across from you is like, I don't even own a house, right? Like, it's like, I don't even, this isn't even a relevant product for me, right?
Yeah.
You go in like, first question, hey, like, cool, like, do you own a house? Like, yeah, I own a house. Oh, great. Like, when did you last replace your roof? Like 30 years ago. Oh, great. I have a roof replacement business, right? 2 ears, 1 mouth. Like some people go in hot and you're just like, cool, that's completely irrelevant to me. Like, thanks for caring about me. And so I think that's like a big mistake as well. When you're like going out and like talking to someone, that might be like general life advice more so than like GP to LP specific advice. And then I think another one, and I think this is maybe too vast of a generalization, but I don't think this is more on like the fun product. I don't think the materials are fully buttoned up enough. And so again, like separating out someone like me, like my whole purpose is to help you go from A to C, and I'm B, helping you figure out B, right? So it's like a smooth transition. Some people want you at C. A lot of, I'd say, like institutions and larger check writers just want to see C. And so like if you're coming in at A, you're trying to skip over something, and they don't see like the logical flow, or they don't see like the pieces as they line up, right? Like you're missing pieces of your data room. Like you're missing, big picture things that you should be talking about in your pitch deck. Like if you're not talking about the right items, right? Like if you're not speaking their language, it's almost like, you go to a country that doesn't speak English, and all of a sudden, like, it's like you're trying to talk to someone. It's like there is a language barrier there. Like, but in this case, it's like the LP language, right? And so I think that's another big kind of gap where you're going, like a lot of people go in thinking it's like, oh, I read this opportunity about raising, startup capital from VCs, like, they've been writing about that for 20 years, right? There's like all these great bloggers, I know a lot of them, like they're like the pioneers of talking about and making the startup world more transparent. But then all of a sudden it's like, okay, great. I know how to raise money. I've raised it even before as an operator or a founder, right? Like I was talking to someone this morning as well, different person, they've raised, I think over $500 million. So from that perspective, it's like, they're really good at fundraising, but their first fund was $20 million. Right. And so like they've been super successful over, a decade as an operator, over 2 decades as an operator, raising tons of, but then like their first fund is only, $20 million. And so it's kind of a different process with different expectations. And I think appreciating it is the advice, like that these are kind of different processes and figuring out, okay, what are the differences and nuances between these two processes? Because again, fundraising and fundraising, like it's the same word, but it's a different process, right? And so I think that's it's like some big kind of misunderstandings or some gaps that if you're coming out hot as a passionate GP with like an amazing track record and strategy, like you can sometimes miss the forest for the trees or not appreciate some of the nuances when you're kind of going to market, so to speak.
When you're talking about institutional, because in the way that I've generally understood it from this side is that up until you've raised probably about 30 over 1 to 3 funds, they're not getting into institutional. So is the place that Coolwater sits kind of the best is that maybe either you haven't raised a fund or maybe you're on your first and you've raised 5 or 10 and you're like, hey, I need to standardize and professionalize this a little bit more to kind of take it to that next level so that we have maybe a data room for the institutions, or like where specifically in that kind of life cycle do you sit best from your side?
I'd say there's kind of maybe multiple stages. So if you're in the audience here and you're thinking about, well, how does this apply to me? There's that first stage, right? I think people on Sand Hill Road, or maybe it's Reno now, they call it like the 0 to 1 phase, right? That is like the thesis, strategy, track record, like pulling it together. What is my initial fund product, right? That is an iterative process. Like I said, it isn't going to happen like kind of overnight. You're not going to pull it out of a back pocket. You're going to be working towards this goal for, sometimes years. But I think it's hard if you're the protagonist to really understand it objectively. And so I think that's one kind of value proposition that we can offer. And like, you can come into our program with the intention of building a fund, right? And like we try to set that intention up front in the interview process, but with the intention of going from 0 to 1. So that's one kind of intersection where we'd be very valuable. The other intersection would be, again, use some just like Sand Hill Road terminology, but like the 1 to 10. The 1 to 10 is like you've raised fund 1 or fund 2, and like, you're good, but you could be better. You have the personality to kind of like, swallow your pride and say like, hey, I'm willing to go through a training program to get better. And you've almost acknowledged that maybe you've run out of like friends and family around top of funnel yourself. And you're like, okay, I've gotten as good as I'm going to get at sword fighting. And now I need to go to a professional sword fighting camp to become even better. Right. It's like, I've used all of my tricks of the trade. And now it's like, how do you level up? Like, how do you get better? And so I think that it feels like we're the institutional training camp for the best managers in the US and more so like in the world, right? Like we just announced, like we're expanding to Japan and we're, launching that program over the next 6 months. And so like, we're very good helping institutionalize your firm. And again, like I mentioned, what was the gap? The gap was like fund 1, fund 2, fund 3. And so from Coolwater's perspective, it's like, okay, what are we offering to emerging managers, to the ecosystem, so that we can help address, again, these different stages, either that 0 to 1 or that 1 to 10. I think within that 1 to 10 as well, and this is sometimes true for the 0 to 1, but more in that 1 to 10, what you need to do is institutionalize back office as well. And so we've actually built an OCFO service, right? This was a parallel training program where, like I mentioned in the beginning, right? Like your CEO, your CIO. Do you need to be CFO? You don't, right? You do need a CFO type person or support system to help you, especially if you're going to take on institutional capital, right? The standards will change, the expectations will change, like your processes will have to change, right? If you take on institutional capital versus, like, again, high net worth or just people that are kind of your friends and family around. And so again, like this is another kind of value proposition that we offer to emerging managers, which is, we believe you need this type of service or support, the kind of back office, OCFO, CFO support, if you're going to make that leap from, right, like emerging manager to institutional manager. And so again, it's another way to kind of engage. And so again, I think of it in terms of like, what is the thing that an emerging manager needs before they're institutional? And we try to address that, right? And so we're not just like a one trick, one thing that's offered, but it's like, okay, if you're here, this is what we recommend. If you're here, we have multiple options, like this is what we can recommend. And the whole time, what we're just trying to do is play that complementary role to you as the emerging manager, right? Because we've helped hundreds of managers, right? Because we've invested into hundreds of managers, like because we believe we've seen kind of what the core problems are, and then have tried to level that up and say like, okay, if there's a systematic, scalable process that needs to be built that's most impactful to the innovation ecosystem, what does that need to be? And again, like what's the product there that Coolwater's creating to offer to support the innovation ecosystem or to support emerging managers? So that's how we've thought about it. I don't know if that fully answers the question. But it's not like you come in at a specific point in time and that's the perfect point of time, because you start to raise funds at any day of the year, right? Like there's some people are 5 years out, some people are 20 years out, right? Like, and so we're trying to say like, okay, there's a journey you go on if you are going to build an asset management firm. What is that journey? Let's first understand that journey and the different stages of that journey. And then like, where does Coolwater sit strategically vis-a-vis those different parts of the journey? And then like, let's build a product that's complementary to you. You're the great investor, right? You're the firm builder. The buck stops with you. You're the decision maker, but we want to play that supporting complementary role as best as possible. And so that's how I view my role and how I view Coolwater's role and kind of the position we're trying to fill in the ecosystem.
We would love to grab a hot take from you, just something about something that's either controversial or unpopular opinion that maybe you kind of hold true to you about maybe the ecosystem, about emerging managers in general, or something in general would be great.
Hot takes. Wow. I don't know if I'm one for hot takes, but there's maybe a few things in the ecosystem that are kind of going on. One is the proliferation of funds, like over the last 5 years, will lead to a lot of consolidation, and we're kind of already seeing that. So I think like, I don't know how much of a hot take it is, but I think like there needs to be a willingness to partner as a solo GP or as a small team.
Yeah.
And this is especially true. Like if you think of it as a journey, it's like, great, you rocked it fund one. Great, you rocked it fund two. And now everyone thinks they're going to be like a $500 million solo GP. Yeah. But it's like, if you look at it, right, it's like the same reason where, everyone's like, oh, but there's 3 funds in the history of venture that never scaled up their fund size. And you're like, and there's 15,000 other funds that did when they were successful, right? It's like, maybe that, right? It's like, oh, but like there's 3 funds in the history of like, the universe that like didn't increase their fund size when they were successful. Mm-hmm. So it's like, great, if you're going to increase your fund size, then like the market data would tell you that you probably have to increase your team size. Yeah. And like, think of that, like, so part hot take, part like, what's the advice? Like the advice is like, okay, start maybe like co-investing with those people. If the expectation is in 5 years, you're probably going to have to partner in your N+2, N+3 fund with a team. Start making those co-investments, start sitting on the boards together, start working together, right? Like, so that's the consolidation piece. Another hot take might be like, we had a AI only fund in our last cohort, right? And it was kind of funny, like, listening to the LPs that kind of came in and like, the AI only fund would kind of talk about their strategy. And there was like, again, it was such pushback, right? It was kind of like, you might like or dislike crypto, but you can't argue that there's, not a market there. And so it's kind of almost like the same kind of visceral response to like an AI decision making engine, like being better than a VC. And every time you kind of feel that like visceral response, sometimes as an investor, you're like, wait a minute, I think there's something here, So again, it's not necessarily a hot take, but it feels like there's certain strategies in the ecosystem that are becoming more prominent where, again, there's, polarization going on. And when there's polarization, there's probably like a chance to kind of make a lot of money. Anyway, I know we're kind of way over time now, but I kind of give you a couple of hot takes, and there's more if I'm ever back on the program.
No, 100%. And you're absolutely, anytime you want to come back, the door is always open. It was a great time to be able to have a conversation with you and genuinely appreciate it. So looking forward to it. Thanks again.
Thanks, Lucas.